Good morning. Today I want to take a look at a couple other companies and different things on some different statements. Maybe in particular I might be looking at the balance sheet, but a little bit of income statement as well. And a couple of the companies, or the two companies that I picked, are ones that you students are looking at, so you may want to pay particular attention, but it kind of goes for anybody. Again, some of these things may be found on any of your financial statements that you're looking at for your particular company. So I've already downloaded the information to the Excel worksheets. And the two companies are, one is SunPower and the other one's Elf Cosmetics. So let's take a look first at SunPower. And the thing, again, I want to keep reminding you is while I'm going to talk about some things that are maybe a little different and maybe not in the mainstream, you still need to write about the normal happenings, if you will, with the company. For example, the fact that SunPower's revenue has gone from, nearly $2 billion, actually down to $1.3 billion. So it's actually decreased through the last several years, but there may be some reasons for that we would want to take a look at, right? But its gross profit, look at that, has gone from a minus 15 million to a positive 221 million. And so while revenues have decreased, it's actually increased its gross profit and has some other kind of interesting things. If we scroll down, I kind of want to do that. We go from a negative earnings per share over $6. Here we had a strange thing go on in what year is that? 2020, I believe. Yeah. What happened there? They actually made $2.80, but then they were kind of back to losing a little bit of money. So again, here that something jumped out right in 2020, and it said, "What happened?" Okay. Well, let's take a look and see if we can kind of figure it out. So, gross profit, yeah, a nice jump, right? Total revenue is actually quite a bit down. Okay. We may want to see what happened there. So the revenue really fell, but they made money. Okay, and I kind of skimmed down here a little bit, and then I've got non-operating income and expenses. Ooh, well, there's a whopping $668 million that's non-operating income. Okay, so what happened? And that in this case, that's something that kind of jumps off the page at me anyhow, and hopefully you as well. So we want to take a look and see what happens, or what did happen. And the best way to do that is, of course, to look at the annual report, right? The 10K. I found that if I'm searching for, in this case, I put in SunPower 10K 2020, and I look for where it says investors SunPower. That's usually the best way to get to the actual 10K that the company has put out. And once again, I'm under the part that says management discussion of financial statements. Okay, words to that effect. So I'm looking for 668, but again, I had to scroll down. I had to look really hard. I kind of had to, let me go up and kind of follow along with what I do. So that management's discussion starts quite a ways up here. I think I'm getting there. Right here. Okay, so it starts on page, whatever that is, page 50. And I'm looking through that. It gives me some overviews. It gives me a few things, right? I may want to glance at some of these, right? The Maxion Solar spinoff. What's a spinoff? That's where they sell a part of a company. It's possible that that's my answer. It is possible, okay? But we'll see, okay? Because it doesn't really give me any details about that spinoff in there. Segment. So I'm starting to just scroll, and I just kind of look at some of these things, right? Recent accounting pronouncements. They're just telling you how accounting laws, rules maybe have changed. Okay, we got the results of operations, right? And again, here's where that other income shows up. Okay, and so I want to figure out what the heck is that other income. Well, I got total revenue. Yeah, That's revenue. That's just their normal operating revenue, right? This was other income, and so total cost of revenue. I'm still in so I'm just going to keep scrolling down. I'm kind of looking at these headlines over here, trying to figure it out. Gross margin again is more of an operating thing, right? That's simply their the revenue minus their cost of goods sold. Okay, that doesn't tell me research and development. So I'm hoping that you guys can kind of scroll again and look at some of these. Gain on business divestiture. I said, well, maybe that was part of it. Yeah, they recorded a gain. 10.3 million gain. Yeah, it increased, but there's 84. That's certainly not the 600, million that I'm looking at. It may be a part of it. Okay, 84. So we got a total of 94 there, something like that. But other income and expense net. Ooh, here's my 600 and in this case, 660. Let's call it the net of other income. Okay. And this, then I started to read through. Interest expense isn't it, but I get down to this third paragraph, which I have highlighted, and it says other income increased by $515.9 million during fiscal year 2020 as compared to 2019, primarily due to a $692 million gain on an equity investment with readily determinable fair value during fiscal 2020. Okay, as compared to a gain of 158. So it increased by, this much, and the total reported was this much, right? Which adds up, or which corresponds with what we saw up above, or in the Excel worksheets. Corresponds closely to what we saw there. So, so what's that mean? Okay, well, what that means, actually, this was an accounting rule change that happened. So I need to explain it a little bit. And in the past, the only time you would recognize those gains, the only time a company would recognize those gains when they're reporting their SEC, their quarterly reports or annual reports, is when they realized the gain or when they actually sold that particular investment, right? Companies have investments in other companies. Berkshire Hathaway is the best example of that. They own a lot of companies outright, but they are also big owners of, for example, in Berkshire Hathaway's case, they're a big owner of Apple stock. Okay, I think they might be the biggest single shareholder of Apple stock. Okay, and the only time in the past, 4 or 5 years ago, that they would have to report a gain is if they actually sold that stock for a gain, or obviously if they sold it for a loss, they'd report the loss. But now they changed the rule and said, no, if the value of that stock, the value of that investment goes up, and you can ascertain what that value is, and for publicly traded stocks, that's easy, right? So for Berkshire's ownership of Apple, they simply have to look up what the current sale price is, in the marketplace, times the number of shares that they have. And if that's gone up, then they have to record that on their SEC reports as income. Completely different when they report to the IRS. They still would only report realized gains to the IRS. So sometimes that makes these statements and sometimes you'll see some conflicting statements as a result of that, because the SEC rules and the IRS rules are two different things. So if you're befuddled sometime because of that, that may well be the reason. Okay, so I figured out now what happened with that big gain there for SunPower. Okay, I think I was looking at SunPower again. Yeah. And this is something that I wanted to talk about, because you guys may find this on some of your statements as well, and that is the concept of goodwill. Okay, and so we come down here and we look and we say, net intangible assets, and they say gross goodwill and other. And that went from, back here, whatever year that was, and then down and down. And I would tell you that normally goodwill, that's how it's kind of recorded, because, of course, this says and intangible assets. So I'm sorry, I gotta take that back. Their goodwill is 0, 0, 0, 0, and then all of a sudden it jumps up to 126 million. Okay. Well, what happened? Well, what is goodwill? Okay, goodwill is the net between, let's call it the difference between the purchase price and the actual value of the assets. Okay, if you remember when I was talking about Starbucks the other day and how come they have a negative ROE, or they don't really have an ROE, and it's because Starbucks does not have any book equity, any book net worth, zero, less than zero, right? Okay, and the reason is they don't have a lot of physical assets. They don't need a lot of physical assets to make money. But if you were going to buy Starbucks, if you looked up the market value, I think I told you it was about $90 billion. So if you purchased, okay, Starbucks for $90 billion, you'd have $90 billion of goodwill, is what that would be called. Okay, and you would record that, and that's what's happened here. Okay, I'm sure, but we need to go take a look again. And so this was the 2021 annual report, and this one I had to dig. Okay, I am not going to tell you that this is ever easy, because I had to look and I had to get down all the way to, what am I under, note 6 or something, but it's well actually beyond the management discussion. And I looked through that section and they didn't have any of that information there, and so I had to keep coming down and, oh, looky, I found this, right? Okay, so fair value, and they're talking about, I got to come up here because they purchased, right, which was an easy, it was a fairly easy guess that when you record goodwill, it means that you purchased something, right? They acquired all of the issued and outstanding membership interests of Blue Raven, a Delaware limited liability, so probably a solar type of a company that's up there in wherever they might be located. Looks like the Northwest and Mid-Atlantic regions. Interesting. Okay, and so you come down, and I highlighted then the part that matters, and here's where they actually did the reconciliation of it, and they said the actual assets that they purchased, you know, they talk about the hard assets, the equipment, the buildings, the land, all those types of things, and it's up here. Intangible are actually considered actual assets. And what are intangible assets? Those might be things like trademarks, copyrights, things like that could be intangible. But anyhow, the actual value of those assets were 17.099 million. They paid a total purchase of 143 million, so the net goodwill 126 million, and that's what showed up there on their balance sheet. And so that you'll see also, let me go back, because you'll see this oftentimes on some places, and you might see goodwill and it may be going down a little bit, okay, each year, because like depreciation, a lot of companies will depreciate or write off the goodwill, okay, and they can do that. I mean, that's again an accepted accounting practice, because over time sometimes that goodwill becomes not worthless, but worth space less, and so they actually can write that off, and they do. Here's intangibles, right? Trademarks and patents, and so it shows those, and that's what they've done there, is that they've written those off. And we saw that in the financial statement, that part of the purchase of that Blue Raven or whatever it was some of those intangibles, and that's what they've booked here. Okay, I'm going to quit there. You know, that's SunPower, and that's just kind of a discussion about both an increase in other income that's very interesting, and also a look at goodwill and possibly goodwill impairment. So thanks, and I'll get out another video I think a little bit later today.